Hi, and welcome to the Stockscores Market Minutes for June 6th, 2014. It's important to understand a very simple concept in chart analysis, and that is resistance. Resistance is a price ceiling that the market will have difficulty breaking through. You see, people's selling decision is affected by where they bought the stock. A person that buys a stock at $10 that is now looking at the stock at $11 will have a very different thought process than a person who bought the stock at $14 and who is now looking at the stock at $11. A trader that has been losing money is likely to exit if the stock hits their break-even price. And so it's important to understand that past areas of sideways price action or previous price ceilings will bring out sellers because the buyers remember these price levels. Previous price peaks represent the upper limit of what people perceive they would pay for the fundamentals. And so these old price peaks have a lot of meaning. Here's a stock that was making a strong gain on Friday and doing so with abnormal volume. The stock went from $2.40 to over $3.20, but notice that a previous price peak back on May 22nd was at $3.05, and that's exactly where the stock settled under before the close, because all of those investors over the past couple of weeks have been losing money, and when the stock got back to that previous high, the sellers came out and kept the stock under $3 a share. Now, this is a short-term intraday chart example, but this holds for longer-term examples as well. Price peaks from 2 years ago for the longer-term investor will have the same sort of meaning. All right, let's get into this week's analysis. Of course, good gains made this week for all North American markets after the U.S. Federal Reserve, after the ECB decided to get fairly aggressive with their stimulative action, and the big hedge fund manager David Tepper made some bullish comments. The market broke out of its trading range and back into the new high territory. We stay in the upward sloping channel, and we're not even at the top of that channel, so there is still more upside before the sellers will be motivated to act at the top of the channel. The same can be said on the TSX market. It is bouncing off of the lower part of that channel, the green line that I've drawn, and it is now likely to move up toward the red line where it should likely get stuck, and then we'll get a pullback. TSX Venture was up a little bit this week, but it is still in a short-term downward trend, which is trying to fight against the longer-term pessimism. Now, what's important about this chart is that we do have a rising bottom building. You can see that the current lows right now are higher than the lows of December, and that's a positive in the long term, but in the short term, we're on this sort of 3-month gradual slide lower. We need to break out of that pattern and up through towards the 1100 mark on the TSX Venture market. I've been talking for a few weeks about the likelihood that the U.S. Treasury bond market was going to see some selling pressure because it had risen up to the long-term downward trend line, which I have drawn in red. Well, that's exactly what happened this week. It is pulled back to the shorter-term upward trend line, which has been underway for all of 2014. It is held above that line for now, and so we're at a real critical point. Will the long-term downward trend be broken, or will we break down below that short-term trend and move back into the bear market that treasuries have been in since the middle of 2012? The US dollar tried to break its pessimism. Everyone was expecting that the euro would go down, the US dollar would go up, but a lot of that trade was priced in before the news of what the ECB was going to do, which came out Thursday morning. And what in fact happened was the old buy the rumor, sell the news situation where the downward trend line on the US dollar has held. I'm not saying that it will hold next week. There is still a little bit of upward momentum there, but as it stands, it is still a bearish chart for the US dollar. Gold is trying to hold. It's made a double bottom so far at 115 on the ETF. We could test that again. Again, I've been showing that very long-term monthly chart on gold, and it has been trying to hold that long-term upward trend line. So we're at a real critical point. This short-term chart is pessimistic. The long-term chart of gold is optimistic, and in the next month we should get our answer about where this market is going to go. All right, oil, our final chart, is at the top of its pattern. This is called a pennant pattern, rising bottoms, falling tops. We're at the top of that pattern, so we should see selling pressure on oil here. But of course, anytime you're testing a line of resistance, which is what the red line is, you could get a breakout through that. And so we need to watch for that. But on the balance of probability, the market for oil is more likely to move down from here than up. Finally, sorry, that wasn't the last chart. This is the last chart, and this is the chart that has me a little bit worried. This is the chart of the VIX ETF, VXX, and you can see it is moving in a parabolic fashion to the downside, and that means that there is absolutely no fear in the market, and that is a concern because when the VIX gets this low, there is a tendency, historically, for volatility to increase. That means a pullback. Now, I'm not seeing any sign of weakness in the equity charts, and so I'm not particularly worried about equities, but this does tell me that buyers are complacent, and that could have a bad outcome in the weeks ahead. All right, so bullish on US stocks, bullish on Canadian stocks, neutral in the long term, bearish in the short term on gold, neutral on both time frames in oil. Stocks are strong, but the high level of complacency is worrisome, as it could lead to a sharp pullback. No sign of weakness, so remain bullish but cautious on stocks. Long-term optimism is fighting against short-term pessimism on gold, and overall, trading action is still light, but we are seeing improvement for the more active traders. Well, that has been the Stockscores Market Minutes for June 6, 2014. Have a great week in the market and trade well.